Hello, 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 hello. Ladies and gentlemen, I hope you're having an incredible week this week. I know we are. We are already into December of 2021, not to date the episode, but that's when we're recording this episode right here. And it's been an absolutely incredible year. Just unbelievable from a lending perspective, real estate perspective, both for good and for bad. In any case, we've continued to provide content as best we can to the relevancy of what people are asking us on a day-to-day basis. We get such an interesting combination of questions around lending, self-employed lending, getting started with buying, investing in real estate investing. And we love to hit on all these topics, but one of the things that we'd love to talk about is the mistakes that people make and how to avoid them, because I think typically everyone listening to this, if you're buying your first, second, or third home, or if you're a real estate agent, you're going to find a lot of value in understanding what are the things to actually avoid so that you can help educate people in advance. And listen, it's a very complicated transaction. We're finding this more and more and more, especially in real estate and lending in Canada. It continues to get even more complicated. So our job here is to try and basically simplify it as best we can. Anyways, in today's episode, we're talking about the 7 things that people wish they knew before buying a home, well, the first or second home for that matter, but typically before buying a property. For this episode, we talked about everything from your financing to the actual purchasing process, but definitely focused a lot on the lending piece, on things that people wish they knew before they actually went to go purchase a property. And so let us know if you're listening to this episode, if you have any questions about any of these points that we brought up, and or of course any other feedback. Again, my name is Alex McFadden. I'm one of the partners and owners here at Thrive Mortgage Co. Today I've got Dean Lawton and Derek Williamson. We're excited to have you join the ride. And the one thing we'd love to ask you for is, if you're enjoying the show, make sure to leave us a review on iTunes. It's super simple. Just go to your iTunes on your phone, click rate and review. If you think we're deserving of it, leave us a 5-star, and of course let us know what you think. That really helps us spread the word. Of course, make sure to tag us up on Instagram, share us out there at Thrive Mortgage Co, at the YVR REMO Show. We have a lot of great future content planned around investing, more guests for the new year, and just so much more information. And of course, the last thing I'll note is that if you have a specific question, you can go onto Spotify or the Anchor app, Anchor, ANCHOR, and you actually can send us a voice note. So if you want to be on the show featured asking us a question, make sure to send us a voice note so we can answer that question for you. Anyhow, folks, enjoy the show today. We'll see you on the other side, and talk soon.
What's up, guys? You are listening to the YVR REMO Show, where we talk all things Vancouver real estate and mortgages, take boring topics and make them interesting. Make sure to stay tuned to listen to everything you need to know how to put cash back in your pocket, create wealth in real estate, and simplify the complicated. All right. So some of the topics that we're talking about on today's episode are ones that we might have talked about in the past, but as we round the corner in 2021, we definitely want to make sure that we create some content or episodes related to not only the year, but information that can be useful for a long time for anybody thinking about either getting into the market or investing or buying a property. One of the neat things that we get a chance to do is we get to talk to people in different areas of their home buying journey or investing journey. So it could be buying their first home, it could be investing in their first property, it could be buying their second or third. And so we've been starting to compile lists of the most common concerns and questions that people come when they come over to us and let us know about their first experience. So we created a list here today of the 7 things that we itemize that people consistently say they wish they knew when they bought their first property. So when they bought their first residence, and things that they had maybe not known about when they came over to us. And I want to be clear, these are all people who came to us for their second home. So we know that the first time around, these aren't conversations that we could have had. Regardless, these are a list of things that we hear that people wish they knew. So let's get right into it. We've got a solid list of 7 things. We have some episodes getting deep into them, but it's kind of nice to compile it all together and go there. And I mean, I'll bang it off right away and we'll start talking about it. But I think a lot of people don't realize, and maybe they realize it, but they don't really think about it. Your first home does not have to be your forever home. It doesn't even have to be a 10-year home for that matter. But at the end of the day, it's not your forever home. And one of the biggest things that I hear people talk about when they're upsizing or buying that second property or whatever they're doing is, I wish I had worried less about this trying to be the perfect property.
Yeah, that's a great point. And, a lot of people will sit on the fence maybe a little too long because they are looking for that perfect home with all the perfect features, checking all the boxes for them. But it really is an investment. It's arguably one of the biggest investments of your life. And just getting into, the ability to start earning equity and growing your wealth is priority number one. And I think that's one of the biggest things to just know is this is an investment.
Yeah, I mean, ultimately, Dean, to your point there, it's not like we're trying to suggest that people that they don't find a property that they would want to have or want to live in. But quite often, like I'll hear things from people who are upsizing and saying, "Oh man, I was so worried. I waited so long because I wanted to have that perfect little backyard, or I really wanted to have a double sink or like kitchen, and especially like situations where there's potential renovations can happen." That's where I hear a lot of remorse from people suggesting that, ultimately I wish I had made a couple of exceptions on, these types of things.
Yeah, the renovation piece is huge. I mean, it's pretty rare that you're going to go out looking for a home and find the perfect property. But if you can go in with a little bit of more of a creative mindset, you can buy something that's typically going to be undervalued if it's beat up and dig into that renovation. But I think just the last piece on this, it's hard, especially when it's your first home. Like there's so much excitement about getting into that property, but you have to be realistic about the type of property as well. Like a lot of people that we talk to, a lot of people come and say they want a 5-year fix. They're buying a 1-bedroom condo. It's not very realistic that someone's going to live in a 1-bedroom condo 4 or 5 years because who knows, right? Like you meet a partner, you have a kid, you get a dog, whatever. Like there's all these life situations that are most likely going to push you into a bigger property. And luckily where we live, appreciation has been a major, major help in being able to do that. But you really got to think about the property that you're buying and like, is it realistic that this is a forever home for you if that's your mindset?
Yeah, totally. And I would say that to your point, we'll talk about these in a little bit more detail as we work through our 7 items because some of them kind of go across the board. But remembering your first home isn't necessarily your forever property. So think about it more from a perspective of like, what is it as an investment for you? What kinds of improvements can you make? Like you said, with the renovations, where can I see the appreciation? And ultimately, if I need to, keep it and rent it out or upsize, what is that going to look like for me in the future? So that would be the first big thing that people say they wish they knew when they're buying their first property. All right, let's get into number 2. It's all about down payments. Now, the funny thing about this is that, obviously a lot of first-time buyers go to their banks because that's where their mom and dad went. We hear that all the time. They go directly to their bank and they get their advice there. And I mean, we know how that goes. Unfortunately, the knowledge base in a lot of the branches isn't accurate. But there's a few key things that we hear about when it comes to down payment. So, I mean, Derek, why don't you talk a little bit about the down payment guidelines, and then Dean and I can fill in some of the gaps that we hear here.
There's a crazy, crazy bound of myths out there about down payments. And I mean, a lot of people think that you have to be a first-time buyer to do 5% down. Not the case, right? So like, I've talked to people that have already owned a home in the past, they sold it, and they're looking to get into the market again, and they're like saving, trying to get to 20%, not realizing that they could have bought a year ago with their 5% down, right? So 5% down is absolutely available to anybody as long as it's owner-occupied in Canada, under $500,000. If you get over $500,000, you have to put 10% on that portion. And then when you hit $1 million, you have to do 20% down. So just really understanding when and where you can use 5% down is super important. The other piece that we should bring up on down payment is 20%. Right? So like we have a ton of clients that are maybe at that 15% threshold and they're not quite getting the qualification that they want. A conversation that we have with all clients is, do you have family that could support you and maybe gift you some extra money so you can get to 20% down? And there are a ton of benefits in doing that. Number one, your qualification is going to go up dramatically, because we get away from the mortgage insurer. We have a little bit more flexibility on qualification and guidelines. So you're going to get a much larger mortgage doing 20% down. You get a 30-year amortization. So your payments actually come down as well. And you're getting rid of that mortgage insurance, CMHC mortgage insurance premium. So there's pretty dramatic savings there as well. So just knowing when and where, if you can push a little bit and get an extra $30,000, $40,000 to get you to that 20% down threshold, it can dramatically change what you can achieve from financing.
Well, I get this all the time, and when the client's coming back for the second time is just wanting to know scenarios, like what are my options with 5% down or 20% down. A lot of people, to Derek's point, just go into it first time And hey, they just get this one scenario because they mentioned, hey, we have 5%. But getting into those different scenarios and knowing how much more you can qualify for with that 20% is so key, because it now allows you to have that conversation with mom and dad about, hey, what are the options to actually buy something bigger? Is this going to be a better investment for me overall? So that bank of mom and dad, this is very common these days, right? We see this all the time. So just having those conversations and knowing your options are key.
Is there some points that you said that are foreshadowing around co-buying and gifting and things like that? But like, I think ultimately people like Derek, you kind of hit the nail on the head. Not knowing, and Dean actually for that matter, both kind of combined points. Like, hey, like look at both your options with the 5 and 20, because a lot of people say, hey, I want to wait till I have 20% down, but the reality is they should get into the market right now. And that's a common complaint from people, like, oh man, I wish I had to just put 5 or 10% down and just got in. Like, I wish I had done that instead of trying to save, because everybody in my family told me to get 20%. Well, the reason to get to 20% really has more to do with your maximum qualification. Sure, there's some expenses associated with that, but based on the market that we live in Vancouver, Lower Mainland, BC, like typically the appreciation outpaces the cost of your CMHC insurance. So like know your options at bare minimum. And then additionally speaking, like don't wait to have a conversation when it comes to the down payment. Just have that conversation. It's so key. 5% down, owner occupied, under 500, like Derek mentioned, and only 10% above that. And you can have these conversations to know the options.
Just one piece on CMHC. So of course, when you're putting less than 20% down, there is that CMHC cost. It's built into the mortgage. Yeah. I get this question a lot. People think it's just a monthly payment, and then when they sell that home, it's done with, but not realizing it's actually just a lump sum fee that is actually added to the mortgage. So you do pay for that full CMHC fee. And that's really important to know. A lot of people just think it's just, oh, I'm just paying for it monthly over 25 years for while I have this mortgage. And that's not the case. It is a full payment. So something to keep in mind. And again, back to options, if you can avoid that cost, it's something to consider.
Yeah, I know your numbers around at the 5, the 10, the 15, the 20, and what the impact is on each of those. So let's get into something Derek kind of foreshadowed here, which is around co-buying and gifting options, how it works, who to get it from. There's a lot of implications here, and I think one of the first things is I wish I knew I could add a cosigner and still have some of my transfer tax exempt. So for example, if you qualify for transfer tax exemption in BC, which there's some guidelines around, I won't go over all of them, but for the short version, most people want to qualify for the first-time buyer under $500,000 to qualify for 100% exemption, meaning you save $8,000. I got a lot of people say, like, I don't want to add a cosigner because I want to save money on that tax. Keep in mind that there's the ability to add yourself as a 99% owner on title to property and a 1% owner if you're adding a co-applicant. That means if you're adding someone else who's already bought a home, you would only have to pay, say, 1% or 2% if there's 2 people for qualification, knowing that you can add up to 4 applicants. A lot of people are surprised when I tell them, hey, you can actually have 4 people on title of the property. You can buy with your friends, you can buy with your family. And again, people are super surprised when I tell them that you can have 4 people using all of their income and spread the love, so to speak. So that to me is a big wish I knew sort of situation.
Yeah, co-signing is huge. I mean, again, it can make or break an application. So, digging into that and seeing what kind of strength the co-signer can add. And while we're talking about, buying with other people or getting support from other people, purchasing a property with somebody else, right? Like if you can't get into the property that you want, but you have maybe a friend that's in a similar position, or like your parents is very common nowadays. Families are kind of combining forces to get into real estate because it's become so expensive. So, if your qualification is not landing you where you need, or you just simply can't get into the market, that's another huge option that a lot of people don't think about just because it seems very out there. It seems like a lot of work. Is this something that's really gonna mesh? But it's absolutely something that we're seeing more and more of every single year.
Yeah, we talked about this on a previous episode about the hassle-free landlord program that Jared Hope runs, where essentially somebody doesn't have money for a down payment. They don't have the option of gift from mom and dad, but they may know somebody that is a real estate investor or just wants to also get their feet wet investing in real estate, but maybe they can't be on the mortgage or on title because of their own financing concerns, but they have funds, they have money to give you or lend you or invest with you to purchase a home. And that's something that I would definitely go back to that episode. Maybe we can put it in the notes what number that was, but great piece on being able to buy a home when you don't have money for a down payment.
Oh yeah, we can go on. We've done full episodes on that. So definitely check back on some of the episodes that we've done in the past about co-buying and co-signing and how that all works, right? The other point really quickly on that is around the gifting options, which we briefly touched on, and where you can get the gifting, which I know we're kind of alluding to right now, but talking to your family. Again, another thing is like, oh man, I wish I'd talked to my grandparents before I bought, because they were going to do an inheritance and we didn't talk about it. And then I bought a house, right? So like that 20% thing, like talk to your family, talk to your grandparents. I mean, I know for a fact that most people that we talk to, their grandparents would rather give them the money while they're alive so people could enjoy that if they're in that position to do so. Like not everybody has that option, but if they're in the position to do so, versus pass away and not even have the ability to see the joy that it brings in your kids and family members, or vice versa. So, having those conversations ahead of time was something that people tell us that they wish they'd done.
Yeah, that's a great point. Early inheritance is something we're seeing a lot more. It's something I'm seeing a lot more now. And pretty much every day we're getting a client that's getting an early inheritance. It's like, you think that might be a tough conversation to have, but just having the conversation about, hey, I'm looking to purchase, these are my plans. It's not necessarily asking for that in early inheritance, so to speak, right? Just have the conversation.
All right, let's get to number 4. One of the bigger concerns throughout the process that people talk about is documents. I wish I knew about these documents or bank statements or so forth. Derek, I know how much you love this topic, so why don't you talk to us a little bit how much you love bank statements?
Yeah, it's not fun typically. It can be an absolute nightmare depending on how you handle your finances. So best case scenario, if you have your down payment in an account, leave your money as is. Like, don't transfer it around. Don't move it all into one account before you've spoken to us. The easiest way to satisfy down payment for a bank is showing them a 90-day history of all your transactions, every single thing that you buy from that account. But as long as the money stayed there, it's easily reviewed and signed off. Oftentimes what we'll see is, someone has 6 different bank accounts and investment accounts, and they're moving $2,000 in and out every single week. Every single one of those deposits has to be traced back. So now we're getting 90-day bank statements on 7 different accounts, trying to trace deposits, and it can just become very, very grueling. And it sucks because we don't want to have these conversations, right? But the banks are going to absolutely put a halt on this. They actually won't fund your mortgage if we can't get through the down payment documentation. So that's a piece of advice I can give anyone going into a purchase is save your money in one account or a couple accounts if that's how you're doing it and investing, but leave it there. Don't transfer the money all around until we've given the bank all the documentation and they've reviewed and signed off. Then you can do what you wish with your funds.
This is a big one. Just documents in general. I get this all the time. I wish I knew how many documents I needed to put together. It was a mountain of documents and it was stressful, and it is stressful. And it's one of the reasons why we ask for all these documents up front, where a lot of people will walk into the bank and they get very little document requests and they think, wow, this is gonna be so easy. They just asked me for my pay stub and there you go. I have my T4 and I'm pre-approved. And then they get to the live offer. So now they got an accept offer and they're at, we have 5 days to gather a pile of documents, and it's very stressful. And knowing that ahead of time is so key. Being able to prepare for all those documents is so important, and it's why we do our due diligence as a team up front. So again, it's not fun. It is not fun getting these documents, but be prepared and we'll help you get there. And that's such a big piece.
Yeah, we get those questions on a daily. Hey, do I actually need to show you 90 days of history? Do I actually need to give you my employment letter, my pay stub, these types of things? Well, in reality, sure, like you don't have to show it to us, but if you want accurate answers, we can only give you what you give us. And I mean, I'm going to end off talking about what I started off with, Derek. I think a lot of times we're getting the bank statements to help you understand the practice of what you're going to do. And most people thank us in the end. They're like, oh, yeah, okay, so if I don't buy in 3 months, well, I need to provide these 90 days again. You're like, yes, okay, well, I know what to do now. I know the experience. I know what I should expect. It doesn't mean they're not going to have to still provide the statements and all the fun that moves around, but it just makes a little bit of a better experience. So keep that in mind when you're throwing your money in this account to that account to this account to that account, that you're basically going to have to set up a diagram.
And get a handle on your online banking, because some people don't use online banking and they're trying to do it from their phone. They're not really familiar with how to filter out the certain days. They're going into the branch and waiting like in a 15-person lineup just to get these bank statements for us. So get familiar with your online banking system and make sure you can filter those out, pull them off as a nice clean PDF with your name on it, and you're good.
It's a virtual world. It's a virtual world. All right, let's talk about number 5, which is where do you get your advice? Oh man, like this is basically every single client we talk to who's buying their second home with us, who bought their first home and they got their advice from like their grandpa or their dad or their banker. And listen, I'm not going to say anything bad about people's parents. Like there's nothing wrong with people's parents, but I think like the reality at the end of the day is, are the people that you're taking advice from the people that are A, practicing it, the B, that are licensed and are providing advice, and C, are not incentivized to sell you a variety of commission-based products, right? Which is kind of key. Like, listen, as a mortgage broker, we get paid to help people arrange a mortgage and financing. That's it. Like, it doesn't matter which product or term or rates or anything of that nature, as long as we're consistently helping you long term and putting you in a good position. But that doesn't apply across the board. And there's nothing bad to be said about people in the branches or banks or anything of that nature. But again, keep in mind, they're incentivized to sell you now an RSP or a TSA or whatever the bank manager pushes that month, right? At the end of the day, they have to hit certain guidelines. Your parents, like, they probably, maybe they have some experience, but they might not have bought for 5 years, 10 years, 15 years. 5 years in the real estate world is like light years. Like, that's a long ways away. 10 years even longer. And most of the clients we talk to, their parents haven't done a real estate transaction for 15 plus years. And while they maybe did a whole bunch of them between the 80s to 90s, the world has changed dramatically, and so do lending products and guidelines, no different than a vehicle for that matter, right? So certainly get advice from the people that you trust, but make sure that the technical advice is coming from people who know what they're doing and talking about, which is key.
Yeah, I think that's so important. Like 5 years, you're right. It is light years. And, the advice that you get even from a professional a year ago is going to be different today because of changes, right? So it's not just who to talk to, but it's just keeping top of mind that time is a big deal in real estate. And a perfect example, June of this year, we had a major change to how much you can qualify for with the stress test. And so, you get people that were waiting and now they qualify for less. And so those are things like if you knew that time is so important, you would probably act quicker on some of these items.
All right, so that was number 5, where you get your advice. Make sure you do the due diligence. Number 6, location, property location. So we talked about the physical property before. I know we're not talking about lending at this point right now, but again, just because it comes up so often, like, I'm going to talk about it right now. What is the one thing you can't change? Where you buy your house. That's it. Now, that doesn't mean that you shouldn't move to the valley if you live in the Vancouver area, or like if you live in the Okanagan, that you shouldn't look outside of the downtown core, or if you live on the island, that you shouldn't stick to a particular city. That doesn't mean that. What that means is, like, maybe the neighborhood that you're looking in, or maybe the features that are around that, or what's going on in the area. Like, be very specific in those factors, at least to a degree. I always talk to people, like, you can have price, you can have location, or you can have the property. And at the end of the day, there's going to be something that has to give. You can't move the location of the home. So you'll have to sacrifice on some other things. And, or if you are going to do that location-based hunt, just make sure that you know what's in and around the area, right? Know the different types of considerations, SkyTrain's coming, buses coming, are they building buildings in the area? Anyhow, all these different types of things.
Yeah, I mean, that's so important. I've seen so many clients buy a beautiful townhouse with a great forest view right behind their yard, and 1 year later there's now another townhouse directly behind their yard, like talking 5 feet away, and now that beautiful forest, quiet backyard is no longer there. So to your point, like, have a look at the community plan, talk to people at the township. Again, back to who you're getting your advice from. A good real estate agent will direct you here, will help you understand what is coming in that area. And that is so important. There's nothing worse than thinking you have something and now you don't.
Yeah, true. And I think the last piece is, like, it's super easy to put your blinders on when you go see a house, because you've been looking at the pictures. Like, you pull in that driveway, you're just focused on the house, right? Maybe it's beautiful and gorgeous, but do you look at the house on the left and right to that property, right? Like, they could be complete dumps with 15 people living in the house, cars on the lawn, you name it. So you really need to open up your eyes and just, like, the street itself, right? Like, neighborhood, theft, all that kind of stuff. You should really be digging into that with your real estate agent. But the street itself, like, you really need to look at what type of properties are on there, what type of people are living in the properties that surround. So again, just don't put your blinders on when you're looking at the house.
One thing I've seen a lot, and this is a common plan, and we really support this plan, where you buy your first house and the goal is to turn that first house into a rental and then buy your next home with a minimum down payment. We've talked about this at length. And big mistake, you buy your first home in a rental restricted building. So now you can't rent that property out. You have to sell that property when you're ready to move on. That happens a lot. And you know what? Sometimes you can't control that. Sometimes strata, it's rare, but sometimes a strata will come in and now agree to have a rental restriction. So sometimes that is out of your control. But you gotta at least look and make sure you're not going into that ahead of time and check those things.
Yeah, you hit the nail on the head with that. Like, obviously, buying into a strata, there are some. I mean, get on the strata council, right? Like, if you are buying a strata-based property, I know we're going into a different direction here, but like a lot of our clients, 2 years, 3 years in, we tell them about being able to keep their property and upsizing and keeping that as a rental property. And like, shit, I wish I had thought about the rental piece in advance. Excuse my language there, but I think we can say that in this podcast. Yeah, like I wish I had knew if it was rentals or at least restricted rentals. At least I knew I could do some, right? What did that look like? The future plans that you mentioned, are they going to demolish the building? Blah, blah, blah. So yeah, do the due diligence. If you're working with a good real estate agent, like honestly, the guys that we typically work with, they'll help you find out all this stuff. Like just make sure to ask the question, and a lot of them will actually just bring it up for you while you're looking, right? Okay, number 7. Yeah, this is basically pretty much everybody we talked to who worked with a bank before coming over to us and decided to work with us. We've talked about this a lot in the past, so I won't hammer it, but I mean, pre-approvals. Like, what is it actually? Let's be honest, like a lot of people we talk to when they're buying their second home, we find that they really are very thankful about their experience with us. Not that the first time buyers or the third time buyers aren't, but I think it's quite frequently because, again, a lot of these people work with a bank the first time around and they didn't have a super positive experience. They didn't actually know what a true pre-approval was. And that's just because typically your bank will just take like a pay stub, T4, punch it in the system and give you your numbers right away. It didn't get fully analyzed. So a lot of those individuals actually had issues that came up or concerns or last minute items, like quite a few of them. And so knowing what a real pre-approval actually is and what it isn't on both sides is key.
100%. And just most important piece, this is you and your personal financial picture that is pre-approved, not the property. At this point in time, when you're pre-approved, the property doesn't exist. We do not know what you're going to purchase, and neither do you. And a bank can decline your file because they don't like the property. You've got to keep in mind that the security for the loan is the property. As much as it's your, credit worthiness to repay that loan and the income verification that they go through, the property is the asset for the security. And it's so important that you realize just because you're pre-approved doesn't mean this is a subject-free type of situation, which we've talked about.
Yeah, I mean, I always tell clients that the worst thing that can happen in this process is we think we've pre-approved them, but we've missed something or the bank's missed something and they go spend evenings and weekends for months looking for homes, writing offers. They finally get one just to figure out that the financing doesn't work out. Like, that's terrible for the clients. It's terrible for the real estate agent. It's terrible for the person working on the finance. It is not a good experience. And that's why we go so in depth and do such a heavy analyze these pre-approvals before we actually issue them. But in this market right now, like, we're in a subject-free market. Right? If you're writing subject-free offers with a deposit in hand, thinking you're pre-approved and you are not because that institution or that mortgage broker didn't pull credit or they didn't look at your 2-year average, all these different situations that can arise. I mean, there's a ton of risk there, right? So in a market like this, you need to have a proper pre-approval and every single document needs to be submitted to your broker or banker.
Agreed. All right. And like last one is a bonus one. So we got 8, but that being said, a bonus one here would be to think about your first home as an investment. Again, we've talked about it throughout the entire process, but so many people, they think about their first home as either their forever home or and it is definitely a home. It is a place to live. It is a place to have a family and so forth. But at the same time, as a Canadian, this is quite literally often our best and number one investment. So last and biggest regret / mistake or thing that people wish they knew was to think of this as an investment, whether it's making improvements, looking at the location, looking at the rental capabilities, considering keeping it. For all of those reasons, it's more of a mindset piece, and that's what I hear a lot of.
I'm going to go off the board. It's something we should have talked about, but knowing the product, we've seen people get stuck in big penalty situations or mortgages that can't be moved, meaning you can't refinance and go to another lender. So we need to come back around and do a real deep dive on knowing the product. I think we've talked about this in the past, but that can just devastate you. So, and that's what we're here for. And again, who you're getting your advice from. So I just had to throw that out there.
I agree. Derek, anything else to add on the investment piece?
No, I mean, yeah, like the stat says, I think 95 or 97% of Canadians' wealth is in real estate, right?
Oh.
Like, pretty amazing when you think about that stat.
Circle that stat, throw it on the board. That's what you need to think about all day long. So think of it as an investment. And if the person that you're working with to get your financing and real estate advice doesn't understand real estate as investment, move on.